Elon with some astounding disclosures and groundbreaking discoveries under his sleeve. The man who never fails to astonish has plenty of surprises in store. Today, we're delving deep into the world of Tesla. For all of you Tesla stock investors out there, we have some incredible stories to offer amid the whirlwind of great news about Tesla stocks. Not only is this a day to remember, though, we have the most recent information on Tesla's stock performance, industry insights, and a preview of the company's upcoming plans. To ensure that you don't miss any more of this kind of stuff, please make sure to use the like and subscribe buttons before we move on. Now that we have cleared it out, let's start the video. Let's discuss a development that shocked even the most knowledgeable Tesla investors. The man himself, Elon Musk, has delivered a bombshell of optimism that would make any long-term investor leap for happiness. The excitement of the gain is what matters, not having to fight all the time. Elon considers Tesla to be the ultimate game changer, with a goal of surpassing all other companies in terms of valuation and generating an astounding $1 trillion in earnings annually. That's a figure that can turn anyone's head around. What's really amazing is that Elon Musk means what he says when he says something like this. He doesn't just say it for effect. Elon's sincerity is evident despite the fact that others might make up attractive numbers to please investors and staff. The key question is whether he can actually make this grand vision a reality, but here's the really exciting part. Elon Musk's steadfast dedication to pushing limits and taking chances is what distinguishes Tesla. Not resting on previous victories, but pushing on to beat the game's next level. As a longtime Tesla investor who jumped on board back in 2019, when the numbers were well below a million, I think this is a moment to celebrate, but we also think that Wall Street may have its predictions wrong and that the growth train is far from slowing down. Tesla recently achieved a remarkable milestone. They rolled out their 5 millionth car just 6 months after the 4 millionth car hit the road. That's not just growth, it's growth on steroids. Tesla is creating a revolution, not just automobiles. A clear difference can be seen in the automotive sector as Tesla is on a totally different path and legacy auto titans like GM and Stellantis are entangled in UAW, causing their production lines to grind to a stop. The figures say it all. Presently, Tesla is accomplishing the amazing achievement of manufacturing a new vehicle every 3.5 minutes, not just locally but globally as well. The rivals are suffocating on the dust of their lethargy due to this production speed. The past lost opportunities are especially fascinating. 10 years ago, legacy automakers had a clear opportunity to seize the electric vehicle revolution. There were indications that a sustainable future was drawing near as technology advanced. Still, they opted for a different route and were hesitant to stay. Reliant on their conventional fuel-consuming vehicles and allowing the chance to pass them by, they are currently finding it difficult to overtake Tesla, a business that not only welcomed the electric vehicle transition but also sped it up. The results of those decisions are being felt right now, raising the question of whether conventional automakers can keep up with Tesla's innovative style or if they will be left behind. The automobile industry is evolving quickly. All eyes are on these legacy automakers as Tesla is changing the game and breaking records at every step. While I can't find much sympathy for companies like Ford, GM, and Stellantis, I do feel a little sorry for the dedicated workers that are involved in this mess. Sadly, a lot of people can lose their jobs as a result of these companies' inability to handle the change. This serves as a clear reminder of how bad the UAW situation can be for all manufacturers attempting to survive, not just Ford. If the UAW proposal is put into action, Ford's UAW-related labor costs will skyrocket, nearly double their current level, and surprise, they are already far higher than those of Tesla. Toyota and other international automakers that use U.S. non-union labor this week, the UAW may just demand additional strikes, and things aren't looking good for GM. This is a little financial knowledge for you, Ford, and Stellantis. The price estimate for Tesla stock has been raised by UBS to $1,290 from $270. Why is this move being made? It all comes down to Tesla's approach to price, though. While this would momentarily hurt Tesla's profitability, lower prices from Tesla might provide them a huge generation of vehicles. Potential investors may be eyeing an entry point because it's going to be a game changer. But keep in mind that timing the market in 2019 is akin to chasing shadows. It would have cost you a lot of money to wait for a better entry point. Not short-term benefits, but long-term vision is what matters. Keep an eye out for the next big Tesla move, although UBS may advise waiting for a more favorable entry opportunity. There are instances when now is the ideal moment to start. Refrain from allowing FOMO to overcome you. Vision is key when investing, and with Tesla, the future appears bright. So buckle up, keep your eyes on the road, and come along on this amazing Tesla journey with us. As of August 2023, price reductions have stabilized according to UBS's Tesla Price Watch. For Tesla investors, that's excellent news, but not so much for those looking for a deal. Still, it's a bit of a riddle. Why is UBS claiming that prices have stabilized when they think there may be a better entry point? It's a conundrum, but let's solve it. UBS has thoroughly examined Tesla's capacity increases and past facility ramp-up rates. According to their findings, midterm growth may be limited if pricing is in line with demand and supply cannot keep up. But here's the clever twist. According to UBS, Tesla will carry on experimenting with price elasticity, or fine-tuning prices in response to supply and demand fluctuations. Although this short-term approach can cause some controversy, it might be the key to Tesla's long-term success. Though it may appear paradoxical in the short term, it's a masterstroke for the larger picture, since they can put pressure on competitors with higher battery electric vehicle cost structures by amassing a sizable client base and maintaining their loyalty. Let's now turn our attention to a significant development. Thailand is home to Tesla's first Experience Center. I adore the moniker Experience Center because it refers to an immersive experience for prospective Tesla owners rather than just a showroom. This is a significant development for investors and Tesla stockholders alike, demonstrating the company's global reach and dedication to the Asian market. But now for the big surprise. According to reports, the Chinese government is pressuring manufacturers of electric vehicles to employ electronic parts made in the country, including semiconductors. Although it might not appear significant, this is seismic. It might have serious consequences and goes against their grand opening slogan. Do you believe that other nations will gladly welcome Chinese cars with open arms if this is really happening? Information goes around. Tariffs and trade wars are unlikely to become commonplace, but for Tesla, there is a bright side. To be able to withstand these storms, Tesla already intends to make cars on every continent. It's important to note that there is no paper record and that the directive to use domestic parts was delivered verbally during a meeting around a year ago. China appears to have played this deftly, eschewing overt proof that overseas companies are being shut out. Although it is a calculated approach, it may not sit well with other countries in the long term. Recall the recent news that the European Union intended to look into Chinese electric vehicle subsidies and maybe impose tariffs on Chinese automobiles. It's likely that there is a connection between these two tales and that everything here is a part of a larger chess game in the global auto industry. On the one hand, the consequences of Chinese enterprises engaging in fierce competition in the EV parts manufacturing market may be felt worldwide. On the other hand, Chinese automakers and components producers may lose their international competitiveness, which might have an impact on jobs and economies in these regions. For Japanese manufacturers in the US and Europe, may encounter difficulties entering new markets and perhaps have to deal with higher tariffs and trade conflicts. Presently, but unlike some other pundits, Jim Chose has put his money where his mouth is by shorting Tesla stock earlier this year. His continued short position is certainly raising eyebrows, especially considering the significant gains Tesla has seen. It's a reminder that even seasoned investors can occasionally miss the mark when it comes to growth in tech stocks. Let's talk about Jim Chose, the short seller who famously declared in 2017 that Tesla was worth zero. Fast forwards to 2023, and he's still expressing skepticism. Elon Musk is never one to back down. On the X platform, he just made a comment regarding free speech. He underlined X's commitment to fighting for the greatest amount of legal freedom of speech. He also made a suggestion that those at X who don't follow this rule would be able to pursue better employment prospects elsewhere. This comment was made in response to worries that X was assisting Germany in Iden.